Would you like an opinion on a financial matter you're dealing with? Whether it's about retirement, investments, taxes, or 401ks, Scott Hansen and Pat McClain would like to help you by answering your call. To join Allworth's Money Matters, call now at 833-99-WORTH. That's 833-99-WORTH.
Welcome to Allworth's Money Matters. Scott Hansen.
Pat McClain, thanks for joining us.
Yeah, glad you are here with us as we talk about financial matters.
And in this presidential election cycle where the madness just continues, and you look at the press and it says, well, the market did this because of this, and then the next day it will give you another reason, and then another reason.
Isn't that the truth?
Right? And the look, I'll be apolitical on this. I'll try to be apolitical.
How about no politics at all? What are we talking about?
Well, we
will talk about finances.
Each one of the candidates have put up positions on certain things.
They both have crazy ideas, I think.
But the press seems to take it to an extreme about how bad. I keep seeing this over and over and over again. Unrealized capital gains will actually sink your 401k. I'm like, where did that?
Unrealized capital gains? Yeah. That was Mark Cuban's line.
Yeah, but where was that unrealized, that your 401k now will be subject to unrealized capital gains tax?
If your net worth is over $100 million.
I don't think Mark Cuban's 401k constitutes. No, where they said that it's going to affect your 401k. Like all of a sudden they're going to start taxing your 401k. I just don't know where you watch the things that take place. And by the way, now it's just gotten silly. It has just gotten silly with the giveaways from both sides. We're not gonna tax tips. Both sides. We're not gonna tax tips. I'm like, okay, perfect. Where are we gonna draw the line? I go to my attorney. He normally charges $500 an hour. He says to me, Pat, it's only $250.
Appreciate a little gratuity. Wink, wink,
wink, wink. Right? So I tip him $200 an hour.
But that's okay. We're going to create a commission, a whole new bureaucracy to come up with.
The point being, you can't, it's so hard to decide what is actually the truth. It's impossible. It's impossible because both sides are up saying things that will never, ever take place.
Correct.
Ever.
Yes. They're not going to tax unrealized gains on net worth over $100 million.
Yes.
It's just too hard to, it's...
Yes. Yeah. Your 401k isn't going to be... The tip thing with no tax, I'd bet hundreds of thousands of dollars that's not going to happen. It's a Pandora's box. I don't know why.
It is a Pandora's box. I don't know why we wanted to start the show here.
I wanted to start. By the way. I get frustrated. Like, come on, can we just have a grown-up conversation about what you're doing, what your plans are, rather than...
both of them.
Oh, no, there's no question.
Yeah, both of them. I think the majority of Americans are saying, these are our two options.
This is... that.
I really agreed with the Pope came out and said it's the lesser of two evils, right?
Right.
And I thought,
yes, actually,
I think that's how most people are going to go to the voting place.
I have 4 children between the ages of 23 and 28. And without exception, their response, I'll ask them, what do you think of this? And without exception, the response is this really the best America could do? These are our two choices.
And you think about that from a young person, right?
Yes, that's why I want to know what their view of it is. Like, and by the way, they're 4 kids. I've got 2 on the left and 2 on the right, and it's universal. Is this really?
Well, of course. You might not have agreed with Obama's policies or whatnot, but at least you knew where these people stood.
You knew where they stood.
Of course.
And then another thing that is,
and then we're going to get on the finances.
And so. Presidential elections, historically, right or left, it's hard to draw a line to the overall performance of the markets, partly because the markets have a long tail on them.
Well, not only that, and the president, fortunately, only has so much power.
That's right. That's right.
And it's very rare when one party controls both sides of Congress and the presidency. And if it happens, it's only for 2 years because they do disastrous things.
That's right. That's right. But then, so the interest rates, right? They cut the interest rates, obviously, if you haven't seen it by now, by 50 basis points, 0.5%. And the next thing you know, you're reading articles on the left and the right. Well, this was a politically motivated act. Like, I don't think so.
Didn't they raise interest rates to stem inflation? And inflation's come down.
Correct.
And if you look at real rates of return, so here's an interesting thing, right? Real rates of return. And this is what you should be concerned about as an investor.
Real rates.
Which means, as a saver.
Which means what your money purchases after inflation.
Because if you look at your portfolio and you're like, wow, I had $1 million 5 years ago. Now it's 1.25. Isn't this nice? Well, inflation was up 25% last.
You're at the same place.
You're at the same place. So if you look at, say, cash investments, CDs, treasuries, right? So 30-day treasuries were north of 5% a couple weeks ago before they lowered the interest rates. Now they're 4.5, 4.75. Yeah. Let's call it 5%. So if you can invest in government guaranteed 5% and inflation's 2.5%, that's a 2.5% real rate of return. Historically, that spread has been 0.5%.
Right? 0.5%.
0.5%. So, people trying to look at where we have no idea where interest rates are going to go. We can guess this as much as the next guy, or gal. But when you've got inflation at 2.5%, what's the rationale behind having interest rates 2.5% higher than that? None, which is why the Fed's it came 0.5% as opposed to 0.25%.
Which is the argument for equities in a portfolio. What is the historical after inflation growth of equities over the long term?
If you go back the last 100 years, 7 percentage points above that of the rate of inflation. That's what, if you've owned, they say the S&P 500, broad stock market, 7 percentage points.
Which means that your purchasing power will double every 10 years.
Not every 10 years.
On average,
Yeah.
It's not a guarantee.
The challenge with owning equities
is that
you might have...
It's a sequence of return events.
The lost decade. Think about the 2000s. It was a lousy 10 years.
Terrible. It was terrible.
It was terrible.
It was terrible.
But there were other ones that were phenomenal. So that's why wise investors are able to take the noise, maybe look at it, it's interesting, but not make investment decisions based upon what's the Fed doing now, what are they supposed to be doing 6 months from now. Maybe there's some tweaks with your fixed income and stuff, and some slight tweaks in your portfolio, but your overall allocation of how much you're going to be in owning companies long term should not be dependent upon what's happening in the current cycle.
What should drive that then, Scott?
Your needs
and
timeline, and how much you can stomach the ups and downs.
And how you stomach the ups and downs sometimes is a change of your situation, either death, disability, right? You think your timeline shortens, you come into a windfall, whatever. When you change your investment thesis is when there's been a life change that is actually causing the change in the investment thesis, not an emotional change.
That's exactly right.
Not an emotional change.
And that's the hard part as an investor.
That's
the danger with paying too close attention to all this, getting too excited. Invariably, Pat, on the day after the election,
what's going to happen here?
We will have phone calls, emails. Get me out. Doesn't matter who wins. Get me out. This is terrible. The country's
oftentimes from otherwise really, really smart people that have an emotional reaction to what's happening.
Yeah.
Right.
It's pretty interesting. Look, we're all emotional beings.
Yes. Well, imagine if we weren't.
Well, then equity prices will be bid up to the point where there's all the excess returns already rung out of it.
Well, life would be awfully boring
If we weren't emotional. It is what makes life interesting. isn't it?
correct, right?
Even our brokenness as humans makes life a little interesting, I find. No?
Yeah, I think yes.
I mean, I've been married 32 years. I'm still trying to figure out my wife. It's a mystery sometimes to me. I thought I was.
You thought you figured it out?
I thought I did everything right. What'd I do this time?
I thought.
Anyway.
All right. Let's go to the calls. And
Yeah.
if you want to join the show, it's 833-99-WORTH. That's 833-999-6784.
Yeah, and we are in California, starting California, talking with Pat. Pat, you're with Allworth's Money Matters.
Good morning. My wife and I have been married 40 years and have 2 adult married children, and each has 1 adult child. We created a revocable family trust, and it provides for our 2 children, 2 grandchildren, and some other relatives, but not for our children's spouses.
Okay.
What, if anything, can we do with our trust, or how can we restructure it or reallocate funds to assure ourselves that our children's spouses do not get all the assets left to our children, particularly if our children receive their respective shares and then predecease their spouse?
Yes.
We're thinking, what can we do? Because we'd want our grandchildren to try to receive their parent share if the parent passes before their child, but we're not sure if it's feasible or advisable.
You know,
And what do you suggest?
There's a number of ways you can structure this.
but I've had this same conversation with my children, and they're not even married, but I explained separate property to them. And what happens if you commingle, which is exactly the question you're asking.
So you're married. So I'm assuming this is a revocable living trust?
Yes.
Okay. So you can essentially do anything you want. So the way it's structured now, right? So something happened to you and your wife today. The money's going to go, is it 50-50 to your 2 adult kids?
Well, it's split up between the kids and the 2 grandkids primarily, and then some residual to others, relatives.
And how old are the grandkids?
The grandkids, one is 19, the other is 24.
And would you give them that cash today would you walk into each one of these and just hand them that money today if it took place?
I don't know if we'd hand them their full shares. We'd probably give them a portion.
Okay.
Yeah. I mean, it's so funny. My oldest is 28. There's no way that I would hand her much of anything.
You're really getting revealing today about the family dynamics of the Hansen household, Scott.
Oh no, my daughter's awesome. She's got a great little career going for herself and all that. She's
self-employed.
I just don't. Business. She even told me that one time.
Don't give it to me.
I wouldn't. A big chunk of cash would not be healthy for me.
There we go. So let's talk about some of the options, right? And this is a conversation you need to have with your estate planning attorney.
Yeah, we're not attorneys. This isn't legal advice.
But
we've seen it all.
This is a general concept. You can create an irrevocable trust at your death.
Okay.
Right?
It only gets created at your death, so it's
you could
simple
do it
now.
You could do it today, or you could do it at your death. What's your overall net worth?
It's over $1 million.
Okay. So then you would have it just created at your death, and then there's restrictions on that actually say how the money is doled out. And so it's revocable, which means you can change it anytime you wish, and that it only kicks in at your death.
Or your second death.
Or the second death, correct.
Yeah.
At the second death. And then it would put stipulations on what can be done with that money.
Okay.
So it doesn't, once that is paid out to your children, they can do anything they want with it because it's their money.
They can give it to their spouse.
They can give it to their spouse. You can't do
can
anything about
commingle
it unless you keep it in an irrevocable trust, which, by the way, you may or may not want to do once you figure out the complexities of an irrevocable trust. So an irrevocable trust would file its own tax return. It has a higher tax bracket than a normal.
And essentially all those tax brackets get slammed down, so almost the first dollar is at the highest tax rate.
That's right. And then there's restrictions on how the money is paid out and to who. But the money's going to get paid out.
And an independent trustee.
Correct. And the money's going to be paid out at some point in time. In which case, even if it's an irrevocable trust, they can give it to their spouse.
Right.
Not if it's locked up for the remainder of their life.
But then they're not getting the money.
No, they only get some income from the money.
And you can do that.
So is there something we could do with the trust so that it only gets distributed in portions
Oh, yes,
to the kids?
You can write anything you want into the year, but essentially within guidelines.
I mean, you could have it set up like something happens to you today, X dollars go to your kids and your grandkids today. The rest remains back. The simplest thing is just keep it in one trust, right? So this is Pat's trust, let's call it. It's all in one trust, and then it gets distributed at certain milestones or based upon certain needs.
Right.
And when you said the estate is $1 million, is it significantly more if we added up?
And then the reason
house
Pat's asking, because the cost and complexity of these, it sounds simple in theory,
until
but
you
they can
get the
expensive.
first attorney's bill.
Yes,
at,
and
at $500 plus an hour.
Yeah. Well, I don't know if it's significantly more, but it's without going into too many details, it's a comfortable.
Understand,
amount.
but if I sold everything you had and put it in a suitcase, would it be more than $3 million?
Yeah. Well, I'll just say possibly.
okay. All right.
Well, you may
Then
or may
it
not.
might-
You may or may not want to do this. You might just live with it. But it's worth a conversation with an attorney to talk about an irrevocable trust. But then remember, there's all kinds of cost associated with that.
Right.
And once it goes to the kids, even in an irrevocable trust, once it goes to your children, nothing's going to stop them from giving it to their spouse
Okay.
at
All
any
right.
point in time. And by the way, just a little drama. We talked about how emotions make life exciting earlier, Scott. Thank you for the call, by the way, Pat.
Yeah,
We're going to go
appreciate
off
it.
subject here. The Murdoch is trying to break his irrevocable. Rupert Murdoch, who's 93, who had given most of the voting shares to his 3 or 4 children, is now trying to revoke the voting share part of it and assign it to just one of the children. And it is in court right now. You talk about rich people drama.
Isn't that the Succession that mini series was based on I think, wasn't it loosely based on the Murdoch family?
Yes. Yeah. So Rupert Murdoch. And that was someone putting something in an irrevocable trust years ago with grand designs that it was going to be perfect. And is now back trying to break that irrevocable trust. And it's in front of a judge to figure out if that's kids suing each other.
Well, and
that's the kids, your kids, which is exactly what you don't want as a parent, is after you're gone,
my
that your
gosh.
kids never talk again. I've seen it.
Oh, for sure. I've seen lawsuits. Actually, I've got a neighbor of mine. He specializes in estate litigation.
And it's
Siblings suing one another.
It's awful.
Can you imagine having that job, being that attorney?
Yeah.
Wow, that would be.
Kids fighting over money that they didn't earn.
Yeah, essentially what it is. Isn't it?
Right. But, not a lot of time is actually spent on, I think in the financial planning process, we try to spend time on the estate planning side of it, but it's an important component of a good financial plan, which is what's going to happen to this money, and is it going to be distributed in such a manner as it's going to keep my children still talking to each other, or is it going to create divisions in the family?
Well, my estate plan, the way it's structured today, should my wife and I both die, I've got the money set aside in a trust for my kids. I'm trying to think the age. I haven't looked at it in a while. It's a long time.
Yes.
But I have an independent trustee, you, Pat.
Thank you. Hopefully I'll never have to perform the job.
Oh, I mean, it's the kind of thing you want a close friend and someone who's knowledgeable in these things, ideally. But
Well, thank you for that. I'm both a close friend and
we've only been
knowledgeable.
business partner for 30 some odd years. So you're like a brother. So Brother, I don't.
Okay.
Anyway, but so it enables the trustee to have the discretion. So I've got a kid who wants to start a business or have this education. Okay, then money can be distributed for that.
But the Ferrari's off the table.
But the Ferrari's off the table. So they're not. And I made a mention of my daughter, like having a big chunk of cash wouldn't help her. But if she's needed some additional money to expand her business, someone else could help her.
Have you sat down with the kids and explained it?
It's funny. Neither one of them want to talk about it much. I think they want to plan their lives without it.
Fair.
Not I think. I know they do. They want to plan their lives without it. If they get some extra money from mom and dad, that's gravy. They want to, particularly my son, he wants to own his own course. It's his path.
Yes.
He doesn't mind me paying for his flight at school that he went through and all that stuff, which I'm happy to pay for. But
we've had the discussion with all of our kids. We have a
commercial pilot, by the way. Not just a hobby.
Every couple of years, we sit down with the kids.
But look, and it's important to. So I had, we'll go back to college here in a moment. I was on a trip earlier in the year and was talking to this gentleman. It was like several families together on this trip. And this guy, his kids they were on the trip. His kids were like 17 and 15, something like that. And he was telling me that his grandfather had set up this trust so that each grandkid gets $2 million on their 25th birthday.
Okay.
And the grandpa had 8 grandkids when he set this up. My friend's kids were not born yet.
Okay.
They were excluded. So he's telling me the story, and he says, this might sound strange, Scott, but I'm really grateful my kids are not in line for $2 million on their 25th birthday. I'm glad they were excluded.
Wow.
And so I said, and he starts telling me about some of his other grandkids.
Oh, what happened?
There's no restrictions. They knew on their 25th birthday, here's $2 million dropped in your lap.
Yes. Which is, listen.
Totally unmotivated.
When I counsel my clients, I'm like, if your net worth is substantial, you want to dole it out slowly so that they learn. Because the first bit of money that they get, the grandkids or kids, they may make really bad decisions.
Money can be it's often an amplifier.
It makes people more of what they already
That's exactly right. So if they're already industrious, hardworking, servant's attitude, that kind of thing, money will probably make them more of that. But if they're
on the other side,
and when you're young, your brain's still developing, for crying out loud. I mean,
well, hopefully our brain is always developing, but when you're young, it is not fully developed.
It's okay.
All right, let's go to the calls.
Yeah, let's talk now with Sandy. Sandy, you're with Allworth's Money Matters.
Hi, how are you, gentlemen?
We're fantastic. How are you doing, Sandy?
Good. I always enjoy your program.
Thank you. We do too.
Well, good.
We enjoy doing it.
Oh, okay.
We don't listen to it. I listen to my own
continuous loop.
Like,
you coming to my house? There it is.
That's awesome. What can we do for you?
So I have an IRA, and I've always contributed to it because I like to take the deduction.
Okay.
But you often talk about the back door, and I don't know what that is.
Okay.
Backdoor Roth conversion.
Okay. And are you working now?
Yes, I am, and I'm 73.
And what's your
good for you?
What's your approximate income?
Okay. Somewhere between $200,000 and $250,000 a year.
Okay. And how much money do you have in IRAs?
I have close to $2 million.
Okay. And all of those are deductible.
Yes, it's a SEP IRA.
It's a SEP IRA.
Are you self-employed?
I am.
Yeah.
And why are you using the SEP IRA and not another vehicle?
Because I guess that's what someone told me I should do a long time ago. So I've done that for 30 years.
Do you have any employees?
I have one. Well, I'm a real estate broker, so I have an employee for my office, but then I keep my own personal business separate as an agent.
Okay.
So I'm a 1099 employee.
Okay.
Because you can set up what's called a solo K and funnel about 60 or 70. What's the limit this year? 60 some odd grand, something like that.
Yes. So you
Actually maybe more than that.
so when I
And
started,
you could funnel it into a Roth.
that's
a Roth
in a
solo
Roth.
K.
Yes. And so when I started in this business 30 some odd years ago, it was the SEP. Everyone was like, it's a SEP, it's a SEP. But it has evolved. Life has evolved past that. And now you actually have many things that are much more advantageous, and you can do it on a Roth, which achieves the same objective, by the way. But I'll explain what a backdoor Roth is and then why it won't work for you. How's that?
Okay, that's fair. So I won't worry about it anymore.
Okay. So
I love that.
a backdoor Roth, actually, what happens is I make a non-deductible IRA contribution. So my income is over a certain level and I can't deduct my IRA anymore. So I make a non-deductible IRA contribution.
And are you contributing to traditional IRAs in addition to the SEP?
No.
Okay,
I got
because you wouldn't
myself
get a
on.
deduction.
So I make a non-deductible IRA contribution, and then the very next day I convert it into a Roth. And because there was no growth in it, I essentially didn't pay any taxes on that. And then there's rules around it. I have to keep it there for 5 years, and there's all kinds of rules around that. But what happens is if I do that, right, and you said you have an IRA or a SEP IRA, right, is I have to do it on a pro rata basis. And I don't know if it applies to a SEP IRA as well. Do you, Scott?
I was reading something as you were talking, so I didn't hear
Oh.
what you were stating.
No. So if I have $2 million in an IRA and I wanted to convert, $10,000 of that, make a non-deductible IRA contribution of $5,000 and wanted to convert it, I have to do it on a pro rata
it's pro
basis.
rata.
Which, because you've got so much money in IRAs, it makes no sense for you. It doesn't.
It would be just like doing a Roth conversion.
That's right. So you do have. And I don't,
theoretically, she could set up a solo K, transfer her SEP IRA into that.
that's right.
Then she would have no IRAs and then do it. But it's not going to benefit you anything.
Correct. And you're probably just better off setting up a solo K and then making Roth contributions to that. Maybe.
But you've got a lot of money in your retirement account.
And your income's relatively high.
Mm-hmm.
And my guess is you don't plan on retiring anytime soon. Is that fair?
No, I'm like you.
Yeah, I get it.
I love what I do. So
So the back door won't work for you. The other question is, well, first of all, you want to do a Unikay, the SEP, if you want to shelter more income.
Well, and a Roth option. So I imagine there's some years that are better than others. And there's some years you might, instead of taking a tax deduction and having even additional dollars, I mean, it's the required minimum distributions that are going to be a real annoyance to you soon.
Soon enough.
Yeah.
This year, this year is the come to Jesus moment.
Yeah, soon enough.
Yeah, so you're going to have your work income and that at the same time.
At the same time. But you can still make contributions to the solo K. You would benefit greatly by sitting down with a qualified advisor and them actually going through the negatives and positives of what contributions and where, and paying for that. And I don't know if you're using
and it's not just about how do we get Sandy's net worth to the maximum. It's like, what are these dollars going to be used for?
And maybe you don't need to put any more money aside at all. Maybe you should just spend it. I don't know. Do you use an advisor now?
I do use an advisor, and the reason I've always continued to contribute to my IRA is because I like the tax deduction.
Understand, but I got to.
But I'll say, but the other thing that I have found is using my IRA as a wonderful vehicle for giving.
Yeah, but there's limits on that as well. I mean,
right.
Yeah.
But the limit is higher than what my RMD is this year.
That's correct. Yeah, and so that's why I said that understanding what is the purpose. So if you've got a high charitable intent and you're like, I'm going to gift my RMD up to 100,000,
up to 100, up to 100.
Yeah, I'm going to gift my.
I think it might have been. Is it 100 or 105? I can't remember whether it's indexed to inflation.
Yeah,
so around 100.
Yeah. Then it's not nearly the problem. And not only that, if your plan is when you pass away to have that go to a charity, which, by the way, it might be some of the best dollars if you're going to give any money to a charity, money from your retirement plan, because
So then I would make the argument that you should actually have a solo K and put more money into it. Is this a conversation that you've had with your advisor?
Not about the solo K, no.
The advisor's the one that should be bringing it up.
Okay.
Your investment allocation, how much is in stocks, that's all should all be secondary to what. Like here's Sandy, 73. I bet when you were 23, you didn't think you'd still have this energy and work when you're 73, but here you are, right? 73, loving what you're doing, no intention of retiring. Like, how do we structure Sandy's financial life so that it accomplishes everything Sandy wants in the most tax-favored manner?
That's the conversation your advisor...
Because the tax man's going to take a third of this or more, like half of your income when you look at your self-employment and all that stuff. So, like,
the solo K would probably be the best vehicle. But, like, you're a real estate agent, and is it residential or commercial?
I mean, I do residential.
Okay. I have never sold a house on my own. I always use a real estate agent. And the reason is they know things I don't. In fact, they know things that I'll never know. And I'm actually, I think I have a fairly good understanding of residential commercial real estate, but I don't understand the intricacies or the questions that I should ask. And so if your advisor isn't bringing these things up to you, like what are the objectives with this money?
Might just have another conversation with another advisor to get...
Sometimes advisors get lazy.
Different set of eyes.
Sometimes advisors get lazy.
As do some real estate agents.
That's right. I'm guessing not Sandy, though.
I'm guessing not Sandy.
So anyway, that's where you need to go. Reach out to a professional and lay it out. The backdoor Roth doesn't work for you, but there are many tools in the chest that can be used.
Yeah, and it's really because I imagine your thoughts on things are different today than they were 10 years ago too, because you've got more assets than you had 10 years ago, and now you're interested in doing charity work and all that other stuff. So
appreciate the call.
Yeah,
and
wish you
keep
well,
up the
Sam.
great
Thanks
work.
for the information.
Thanks.
Yeah.
Hey, Scott. So I was talking. This reminds me. I was talking to a friend of mine that was in financial services for a little while, and he didn't like it, and he quit. And he hasn't done it for 15 years or so. And I was telling him about all the new tools that are they're unbelievable, right? I was talking about direct indexing and how inexpensive it is and he understood what I was talking about. Like, you replicate 95% of the S&P 500 and you can actually through about 80 or 90 stocks and you can take off gains and gift. And he's like, wow. And then I said, and AI is coming into our business. And he's like, well, how would you guys use AI? So I started talking about the tax program that we use.
Yeah.
And he's like, how's this thing work? And I'm like, you take a tax return, you feed it into the computer, and it comes back with some suggested recommendations, or at least things that you should look into, which it flags things for the advisor that says, maybe this, maybe this, maybe this. And this phone call,
this call we just had.
phone call
Right.
was like the program would say, if she's self-employed, why is it just a SEP? Why isn't it a Unicade? Because it knows all the tools that are available around it, and we use it. Look, we're a fairly decent sized firm. Like Barron's called us one of the top 20, I guess, in the U.S. So we get economies of scale and good technology. We have a great technology team.
That's one of the benefits about being. And there's a lot of consolidation occurring in our space, the independent advisor space.
That are independent advisors, but they're
all rolling together, just like large law firms and large.
Yeah. So anyway, we use this tax program, and I was telling them about how great it was, and then
because you can do these what if scenarios.
That's right.
What if I did this? What if I did that? What if I and there's lots of different types of credits out there and deductions you start to lose. And so you can
and then Medicare and all of that goes in, and it's complicated, right? But the technology drives a lot of helping in the decision making.
What happened? So what would happen if we took some of that interest and it was qualified dividends rather than ordinary income from the dividend, right?
Right? Yes.
Like, how can that what if we put this asset into the IRA as opposed, like all those different sort of things?
What happens if we had the capital gains come out in the brokerage account and all the
and you could play all kinds of different scenarios.
So I was telling him about this, and then our marketing department reaches out. Says we have a marketing department. We're a business. We want clients, and they said, "Well, what do you think about just asking the listeners of this show if they want a free tax review?" This is marketing. I'm like, "Do we have capacity for it?" That was our first question.
Yeah, I saw I was on the email train. Like,
do we have capacity for this? Do we have?
Like, I'm trying to think. Last time we had like an offer, free offer for our listeners. This is for our podcast listeners.
Yes, for the podcast listeners. So we have.
And by the way, we just hit our 3 millionth download on the podcast.
Congratulations!
Yeah, congratulations. That's kind of a big deal. I don't know how
is
much.
It? I don't know whether it is or not.
Of all the millions of podcasts.
Well, that's not fair.
What?
Everyone's got a podcast.
I know, but we have 3 million downloads.
I don't know if that's good or bad. I saw that.
We're not Joe Rogan, but you know.
Okay, we're not nobodies.
Whatever. I mean, apparently people like the show.
Okay, so the marketing reaches out and says, "Hey, we have this technology. We have capacity. We have advisors that will actually interact with people that are interested in a tax review." And I'm like, perfect. What do we do? How do we do this? And look, if you listen to this program at all, you know that we think that the alpha, the benefit, a large portion of the benefit that is derived from our clients is not just the asset allocation.
It's down the list.
Yes, it's not just the asset allocation. It's how the money goes downstream. What is the most tax efficient?
It's the planning there.
Are you taking
the
advantage
guidance?
Of all that? So where are we with this, Scott? Do you know how they take advantage of this thing?
So we're offering free tax reviews starting today through November 30th of this year. Okay, so a couple months or so. So it's free, and with this, we look at what tax savings opportunities might there be. Are there some available tax credits that we're not taking advantage of because the way things are structured today? Are there some ways to reduce not only current taxable income but future? What strategies can we have to lower your tax basis, both at state and federal level, both, and a lot more? And
so, another example, I was traveling. My wife and I were traveling with good friends of ours. He's done very well. And we started talking about charitable giving and said, well, didn't you set up a donor advised fund? And he said, what do you mean? And I said, where do you keep your money now? And he told me, and I'm like, boom, emailed him. I said, they have a donor advised fund at that brokerage firm that you're at. This is how you do it. And he said, he said, why haven't I been doing this? Why haven't I been and super smart guy. It actually works in finance,
just
but not
you're
this
smart
side of it.
doesn't mean
that he knew the tools. So the idea behind this free tax review is to see if you're missing something.
Yeah.
Is there something that you're missing? Is there a way that you can make your own tax situation better? Just using the existing tools and we wouldn't offer this, by the way, if we didn't have the technology. It's the technology that drives it, that flags it, and then says to the advisor, consider this, consider this, consider this.
But it's not just the technology. It's kind of like you've gotten an X-ray before.
It's an MRI.
Right? I don't even know what I'm looking at. No. And a skilled expert can look at it and say, well, here's what we're seeing. This, because they've done it a million times.
Yes, it's the MRI for your tax return.
That's exactly right. And look, we'll give you some concrete steps afterwards. And look, there's no obligation to this. So you're not obligated to become a client. Like
we'd like that.
We're going to let you in a little secret. Part of the reason we started this program 29 years ago and continue to do it today is because we know it helps us attract clients. So obviously we'd like that. We've got, 150 or so advisors that all worth somewhere in there. And we're continuing to grow and So, but again, there's no obligation. If you
Yeah,
don't, if you're like, I'm not looking for an advisor. I don't want an advisor, but I'm curious of what benefit. Would love to have a conversation.
It's an easy way to interact with our firm, get some value, and see if we're actually, if you want to hire us, we're not pushy.
I always hate the things like for the first 8 callers, like we're not trying to be gimmicky on this is through November 30th.
We just won't after November 30th.
There's no capacity because everyone's starting to work on our tax team is busy with tax stuff. So because we've got both CPAs and CFPs here at Allworth. So to take advantage of this, we've got a Money Matters listeners free tax review on our website. Simply go to allworthfinancial.com/tax. Again, allworthfinancial.com/tax. And
there you go.
There. So let's continue on with calls. We're talking with Troy. Troy, you're with Allworth's Money Matters.
Hi, gentlemen.
Hi, Troy.
Am I the 8th caller?
Ninth. I'm so sorry.
Sorry. You don't get the oven mitts.
Darn it. That free tax review, I'm definitely going to look into that and possibly be a customer.
Okay.
Good stuff.
Well, it's free. You're not really a customer. You're just trying us on.
Yeah, trying you on. I don't like the other advice that I'm getting that companies come in and put charts on the wall and you're guaranteed 8% and hand my 401k money to somebody else. So it's kind of leading into the reason for my call is certificate programs and what are the best starts? I suppose.
Certificate programs on what?
Certified financial planner is sort of where I'm leaning right now.
You mean you becoming a planner?
Correct. And I want your advice as to developing a roadmap or a list of check boxes on how to get there.
Got it. And do you want to, are you doing this out of, like I had a brother-in-law that went through the CFP program while he was working as a programmer just because he found it interesting, but never entered the field.
I had dinner last week with a gentleman who runs a large international orphan care and ministry of sorts, nonprofit, who got a CFP out of curiosity.
So yeah, why do you plan on practicing in the industry, or is this just something you want to do?
I would love to practice in the industry and also manage my own personal funds. I guess maybe a little bit of background to get you started here as to, and I'm calling for your advice as if you were me.
Okay.
And your knowledge of years of experience.
Well, if I were you, I wouldn't call me.
Hand the phone over to your partner.
So how old are you, Troy?
I am 51 years old. I'm a U.S. Army veteran. Lived in Reno, Nevada for 10 years, your neck of the woods-ish. Los Angeles, California for 2 years. I've got a Bachelor of Science in Education from the University of Wisconsin, Oshkosh. And I'm currently enrolled in a technical college in banking and finance, and I'm looking in to get that certification. But I don't know if I knock on the door of a bank for hiring. Do I knock on the door of a local financial advisor? I know what I don't want to do, and that's go through the BIGS program and build a book.
That's okay.
So that they can have it after my,
so
pound in the streets.
How are you making money now, or are you living on your benefits from the government, from your service?
A little bit of savings that I have left over. I've had to wipe out all of my previous retirement funds due to a serious illness that I had in 2023, where I lost my employment after 28 years with that same company that moved me around the country. So I tried to always stay on the up and up, and made the mistake of cashing in most of my retirement funds, and just to pay the medical bills.
Okay, so you need to go back to work.
I absolutely need to go back to work. One, I'm too young, and I need to stay busy. And two, I'm fascinated with analysis. of
So,
stock markets, ETFs?
well, there are so many vehicles open to you today that wouldn't have been available even 10 years ago.
Yes.
And part of that is because of the consolidation that's actually taking place in our industry, which leads to more specialization. So there are a number of CFP programs that you can enroll in online.
Yeah, and if you go to the CFP board, whatever their website is, they'll have some things that list. But you could either do it. There's private companies that do that, or I know some universities do.
UCLA does.
An online version of it?
Online version.
Yeah, so does UC Davis. I imagine
Many.
I know I had a friend who did the UC Davis program. No, it was Berkeley. I'm sorry, it was Cal Berkeley. Berkeley had a program, and she was able to get a scholarship for it, which you may be based on your military background. It took her about 9 months or so to get through the whole material, and then you have to become a certified financial planner. It's not just the education.
You have to actually get a job working at a financial
you need
planning
3 years
firm.
of experience, and you have to pass a 2-day exam.
But your BS in education would make you perfect at this, because a lot of what financial planning is trying to explain to people what you're doing. So I would encourage it. If you were my little brother, I'd say go for it.
Do you live in LA now or Reno?
No, neither. Actually, I live in Wisconsin, just south of Green Bay, and UWGB has a program, which I've been researching quite a bit. I'm on the CFP board, actually, online, interacting with some professionals already since my initial reach out to you.
So Troy,
I'm going down that path, but the question is get started. How do I get started? Do I
just
knock
enroll
on the door of a local financial office?
No, you enroll first. Get your CFP. Enroll in it.
If you can do it, but he didn't have a lot of extra cash sitting around to go too many months without a
understand.
job.
Enroll in it.
Exactly.
Enroll in it, and then go to a decent-sized firm. When I say decent, I mean over 100 employees.
Look at Barron's list of top independent firms.
Perfect.
Right, so there's a transformation.
You're 20th.
there's a transformation going on in our industry, right? So it used to be, and as you talked about, you'd go to work for a company, they would teach you how to go sell products and services. If you can drum up clients, you've got a job. If you can't, hit the road, right?
But that's over.
What it is.
That still exists,
but it's
dying.
And now we're seeing a lot of these national independent firms. There's a lot of them now, and
such as yourself,
but there's a lot of us, and there's a variety of different professionals, a lot of different subject matter experts, and they employ lots of folks that aren't out there finding clients, not business development.
They're not client facing,
or they might be client facing, but
they don't have to go get their own business.
They don't have to go. That's not their job.
So what would happen is enroll and then start calling around.
And maybe you start out as an educator
or an analyst, right? Or an educator, which means they want you to go in and enroll 401k participants.
Or you can educate new employees, new client service people, or depending on what you.
But you've got so many things going for you, right? You've got a long track record. You're an Army vet. You've got a degree in
your
education.
age is beneficial too.
Oh, the age is great.
By the way, when I was a young man as an advisor, and I knew my age was a bit because, I still pop my pimples. And I would say to people, the benefit about being working with someone like me, my age, is I'm young enough. I'm going to be around there till the day you pass away. I'm there your whole life,
which has been mostly
now
true.
That I'm 58. It's like you want an older, experienced advisor. The benefit of working with someone my age is all the experience and wisdom I have.
But there's infrastructure behind that, right?
Right.
So what happens is
that's exactly
in a
right,
firm
Pat.
like ours, you might have a lead advisor and a sub advisor for each one of the clients, right? And so they both interact with the clients.
And ideally, you work on a team like that. So there's someone like a Pat McLean who's been 3 decades of this in the industry,
and we mentor you. So we have a formal mentorship. Most of these big companies, I'm probably more excited for you now than you are. It's perfect. It's perfect.
Well,
And
I mean, I looked at your structure, and it sounds to me like you're interviewing me, because I think we need an Allworth financial branch up here in Appleton, Wisconsin.
well, but there are many firms many firms will hire someone like yourself on a remote basis if they don't have an office close by.
Sure.
But you
want to be in an office. For your benefit, you want to be in an office. You want to be client facing. You want to sit next to an experienced advisor. And
the best way people learn in this business is they have the education, but it's sitting side by side with an advisor in client meetings, watching what's going on there. And then it's also that 5-minute discussion with the lead advisor afterwards, like just to talk about what transpired. And because as you know, if you've listened to this program for any length of time, people call with a question, and oftentimes that question is not the number one question in our minds, right? And those kind of nuances you only get from like being in the trenches.
Yes. So you should enroll immediately.
The trenches.
It's not like we're going to the salt mines. You've already done the trenches.
You've done that's a different kind of no.
So start with the Barron's List and cross-reference that to your geography and enroll and go in and tell them your story.
There might be a company that specializes in hiring veterans. That might be one of their big issues is they want to hire veterans.
Yeah.
They are looking at AFC certification, and there's some clientele areas around this area that do that as well. And then there's a whole list of certifications, MBA and all that.
You don't want an MBA.
There's no way.
No, just
I'm going to get that.
You don't want an MBA.
Yeah. I question whether you need this banking thing that you're enrolled in. The CFP,
the Certified Financial Planning Program.
So we wish you luck.
Particularly if that's what you want to do. If you get your CFP, if you had your CFP today, you'd have a lot more options.
That's right. So you need to get started.
Yeah. And I mean, if you can somehow get that education before you get a job, but if you need a job, start looking for a job. But I would enroll, to Pat's point, I would be enrolled in one now. So when you go to a potential employer, you can say, here's what I'm doing, here's where I've been, here's where I'm going, and here's why I should be with you. So anyway, and wish you all the best. And this industry needs more advisors.
That's right. Call us back when you're up and running, successful.
Yeah. So anyway, we're out of time. It's been great being here with you. And as always, we're here every week. Scott Hansen, Pat McLean of Allworth's Money Matters.
Free tax review offers for a limited period between September 28th, 2024 and November 30th, 2024. Tax services are provided by Allworth Tax Solutions, an affiliate of Allworth Financial. Acceptance of this offer is not an obligation to become a client of Allworth Financial or Allworth Tax Solutions. Allworth Financial does not provide tax preparation advice. To learn more about this offer, please visit allworthfinancial.com/tax. Additional terms and conditions may apply. This program has been brought to you by Allworth Financial, a registered investment advisory firm. Any ideas presented during this program are not intended to provide specific financial advice. You should consult your own financial advisor, tax consultant, or estate planning attorney to conduct your own due diligence.